We now know that it has cost a whole lot more to live here in Colorado, but it could be soon getting worse. We are talking health insurance premiums and the warnings from insurance companies.
That was a part of our newest episode of the Business Buzz, which starts streaming on 9 News Plus tomorrow. Here's a little preview.
Regulators are now proposing emergency rules to deal with potential premium hikes. Talk to us more about what's happening here and what's at stake.
Well, I think one of the things that people looked for in the One Big Beautiful Bill earlier this summer was what was in it. But one of the key things that insurance regulators looked at was what wasn't in it. And that was an extension of the federal enhanced premium tax credits. And this is money that essentially went to the states to allow them to take people who are going onto the individual market, which is more expensive than the group market because there's frankly less of a pocket of people to insure there, and to help them with their premiums.
Here to break it all down, we have Business Buzz co-host Ed Sealover. Thank you so much for coming in this morning.
Thanks for having me on, Lauren.
Yeah, definitely. So let's start here. They talked about a lot about how insurance premiums could go up without this credit extension. So what does that mean?
Well, the insurers have turned in their proposed premiums to the Colorado Division of Insurance. And what we know is that people who buy on the individual market, those are folks who buy on their own rather than through employers, are facing 28% average premium increases next year. Those who buy through the small group market, those are folks who work for companies with 100 or fewer employees, are facing 13% average premium increases next year. The state doesn't regulate the large group market, so we don't quite know what's coming there. But that's just the beginning. Because the federal government has decided to not extend these enhanced premium tax credits, and those were credits that were meant to make sure that you didn't pay more than 8.5% of your income for insurance costs, folks could be looking at doubling their costs next year. This is particularly going to hit folks who are at least 400% federal poverty level or more. Those are folks making, say, $62,000 a year individually, $128,000 a year for a family of 4. But in the Denver area, those folks are paying an average of about $11,000 a year for their premiums now. They could be looking at $25,000 a year next year that they're paying.
But did I hear you guys talking about that the state is trying to step in and provide some kind of relief there?
Yes. Now, some is the operative word. The state is facing its own billion-dollar shortfall in its budget, so it doesn't have a lot of money to throw to this. But through the emergency regulations that the Division of Insurance is proposing, they're saying that we could offer $50 a month to people who are making 200% federal poverty level or less. That's about $31,000 a year for an individual, $64,000 a year for a family of 4. And then we could offer $18 a month break to as many as 3 of their family members. Now, that's not going to be a huge difference. What they're averaging is that folks who are now paying about $17 a month in that category will be paying $38 a month next year. That's some help. It's obviously not as bad as the folks who are going to be paying $2,000 a month next year. But the sum total of all of these problems is that the state believes about 110,000 people who are now insured will choose not to be insured next year. That's about a third of the individual market. And because of that, more people will show up to hospitals without insurance. Hospitals will need to get that money from somewhere else because those folks aren't going to be able to pay much. And we are likely going to be seeing spikes in costs for care for people who are insured at all levels next year.
We were talking about Colorado's unemployment rate, Colorado's poverty level, but that doesn't have to do with the unemployment rate.
Yeah, this is another segment that we go into on the show this weekend. It was a nice talk with Nick Sly of the Federal Reserve. And we talked about how Colorado now has a 4.7% unemployment rate. That's higher than the national rate of 4.1%. And it bucks a trend for about a decade where we've been below the federal rate. But it's not all bad news. The reason we are so much higher now, in part, is because we have more people participating in the labor force. About 68% of the people in the state who are at working age participate in the labor force. That's 5 points higher than the rest of the country. So when people in other states lose their jobs, they generally say, well, maybe I will retire, maybe I'll just drop out of the labor force. In Colorado, that's less likely to happen. People are going to turn around, they're going to get back and look for more jobs, especially younger tech workers who are getting laid off. And so that reflects itself in a higher unemployment rate because we still have more people looking for jobs.
Well, boy, you say higher premium rates and everybody's ears immediately to perk up about that one. So I have a feeling a lot of people are going to be tuning into this episode. Ed, thank you so much. We appreciate it. By the way, you can catch the new episode this afternoon at 2:10 streaming on 9 News Plus. It's also available anytime on 9 News Plus on demand. Let's get